You know, this bear market won't drain your bank account first, but what it will do is drain your ability to think clearly and make proper decisions. Because the real danger is not buying the dip, and actually buying the dip is terrible advice if you have no idea what on earth is going on in the market. The real danger is panic selling the bottom because some crypto G told you Bitcoin's going to zero, or even worse, buying into a bull trap because somebody else said it was a good idea. So in this video, I'm going to give you a grown-up, boring plan to help you survive the bear market with no predictions, no hype, just rules so you can survive the next 9 months and be ready when the risk flips. And if you wait to the end, I'm going to give you a really simple checklist that you can just kind of screen grab, print off to help you follow the same plan. So this video is for people who want to protect their Bitcoin and their crypto capital, to avoid silly trades along the way and stay positioned and ready for the next cycle. If you only take one idea from this video, make it this one, because everything else is really just optional. Most people don't lose in bear markets because they choose the wrong entry. They lose because, you know, bull traps can be really, really confusing. You run out of cash along the way because you've tried to rotate in and out of different things, or you've just sold at the wrong time. People blow up their conviction. If you listen to too much Twitter, listen to too much YouTube, you start to question your own approach and your own conviction in Bitcoin and crypto. And a lot of people confuse activity with progress. You know, people think doing stuff is moving forward. And investing, sometimes standing still, is the best possible option. If you want to win in the next cycle, you really need to be in one piece when the bottom shows up. Survival is a strategy in a bear market. And don't forget, guys, bear markets make fools of bulls and bears. In the past, I've talked about where the bear market bottom might be in terms of realized priced and balanced priced, or what the price could be. But ultimately, I don't really do predictions. I use price and I use these metrics as a confluence to help me decide whether I'm in or out the market. Now, I do have a system that tells me whether I'm in or out the market, and I use these things as confluence to back up my decision and to help validate my strategy. So instead of asking, is the bottom in, ask, what is it that would happen that would cause me to do something stupid? And how do I remove that pressure now? How do I get rid of that? What research can I do to remove that pressure and stop me making a mistake in this bear market? When we had the FTX crash, I was already out in the market, and I remember being really shook by it. But ultimately, my capital was preserved because I had a system that got me out in the market before that crash. But if I was in that crash, you have to ask yourself, how would I have behaved if it shot down to the $15,000 it did? Now, if you have strong conviction, you probably would have seen that as a kind of a buying opportunity. I mean, I would have been well out the market by then. I don't buy the dip. I buy when the system tells me to. If Iran go and drop a nuclear bomb in Washington tomorrow, how would I react with my portfolio? I mean, you know, if that actually happened, then yeah, obviously, you know, run a mile, you know, you absolutely yourself. But what would I do with my portfolio, my Bitcoin portfolio, if that actually happened? I use a simple risk framework, which I've talked about previously, called the Bitcoin investment traffic light system. When the signal is zero, green, if you like, and the traffic lights, it means conditions favor being risk on for Bitcoin. And I hold Bitcoin in spot, never in leverage. That is financial advice. When signal 5 comes up in my traffic light system, it means there's caution in the market. That means there's structural risk in the market. Liquidity is drying up and it's time to start to pay attention. It's at that point I start to think about rotating back into stables in one hit, or maybe over a few days at a time. And when my traffic light system hits signal 11, which is red, call it 11, and you'll see why I call it 11 in the video up here. It's time to rotate back out to stables. Not alts, not ETH, not anything else. Rotate back out to stables, cash, and preserve your capital. In a bear market, the goal is to be ready for signal 0 without needing to be right ahead of time. It's about being ready for when the risk flips. In about 20 to 30 seconds time, I'm going to give you a DCA structure that you could use, and you can screenshot if you want. Personally, I think DCA does have a place, but I'm going to explain what I think about DCA in the next 2 minutes. A bear market needs a plan that is boring enough to execute. Be prepared to be bored. These are long, arduous journeys of months and months of very little activity. A good bear market plan doesn't require motivation. It requires systems and consistency. And your bear market plan really shouldn't be changing from week to week. It shouldn't be based on emotion. It shouldn't be based on what the next YouTuber says. It should be based on a set of rules and a structure that you follow based on your conviction, based on your thesis. When you're creating your own DCA plan, there's a simple structure you can use and adapt and modify to suit your own appetite. So picking your cadence, investing weekly or monthly, that all depends on how much capital you have to start off with. Pick your amount, you know, If life gets expensive, which it can, you know, I just had my council tax bill through for the year and it's absolutely extortionate. It's made me rant and rave, but ultimately I'll end up paying it and bending over for the man because that's what we all have to do. But everyone's amount is different, how much you have. But if life gets expensive, which it does, kids need new trainers, kids have a school trip, make sure that you have an amount that is appropriate and relevant to kind of your budget and to suit you. A good DCA plan is automated, you know, it removes willpower from the equation. Have an amount that you can invest in regularly and make it automatic, you know. In those situations, you could put a stress test in, you know, if you've got redundancy at work or your boiler goes or something like that, or, you know, you need a new radiator or something, have a rule that if your income drops, your dollar cost average amount scales down rather than stop. Stopping's the worst thing because you've given yourself permission to kind of ignore it and move on. But if you scale it down, even if your DCA is $10, put $2 in, put $5, just make sure you stick to your plan. Consistency beats motivation every time. Because the point of DCA is not maximum returns. If the point is consistent exposure without collapsing emotionally, without being drawn into it because your heart rate is pumping 1,130 beats per minute. If you want to know what a sound DCA strategy looks like that won't leave you 40% down from 10 days in, hit like now, hit subscribe, add a comment DCA, and I'll make a video specifically about a DCA strategy that starts at the right time, not the wrong time. Imagine, if you will, someone told you to DCA and you DCA'd in October 2025 and you set yourself a 12-month DCA strategy and you DCA'd from the top to the bottom. You could be down 70%. You've got to wait for the next all-time high before you start making a profit. Now, for some people that's fine, but if you're engaged in crypto and you consider yourself a bit of a crypto person, or you're a bit, you know, you're adequately educated around investing, that's bad. You know, if you're going to DCA from a market top to a market bottom, DCA is bad. So there are some examples when DCA is not a good idea. That's one of them. Stop right there, guys, because this is the part that most people skip because I'm talking about adding more money, and you're going to turn around and say, oh, where do I get more money from? If you want to be ready for the bottom of a bull market, the best move might not be on the chart at all. It could be earning more, spending less. If you're in a position to do it, clean up some high interest debt, credit cards, things like that, extending your runway. Now, as much as I love making content and helping you guys, I don't want to sound like I'm telling you what to do here. I hate videos that are always like, earn more money and spend less, because, like, you know, you're not me and I'm not you and everyone's different. But please hear me out, guys. Increase your income, ask for a raise if you need to at work. You know, this is your future you're talking about. It's not completely out of the question to ask your boss for a raise, especially if you're working hard and it's not their money, let's be honest. Next time you're sat at home watching the Manosphere or Sopranos or whatever it is you're watching, think, could I be earning money this time? Could I pick up a weekend or a side gig for 3 to 6 months just to bolster my income? Whenever I think about spending money on things that I don't want or I'm wasting time, I sometimes think, if I invest £1 or $1 or €1 today, what is that going to be worth in 10 years' time? That makes me move. That's a really good motivator for me personally, where I think about, if I spend that £1 now, what is that £1 worth for me in 10 years' time now? When Bitcoin, if Bitcoin hits 50K and when we do go to 1 million, that £, dollar, or euro is worth 20 times more. That's a powerful thing to think about to keep you motivated. Plan meals for the week. I know it sounds like Martin Lewis or a flipping Jamie Oliver or Gordon Ramsay things. Guys, plan meals for the week and stop financial bleeding. Takeaways, curries, things like that. They cost a fortune. Stop bleeding your money through your belly. Like I said, guys, this is the part that nobody wants to hear, but it absolutely makes sense. But more importantly, it's the part that makes the next cycle much easier. This is the part that people blow up, going all in on one emotional day. You know, we have a Bitcoin crash and everyone piles their money in because they think buying the dip is something they should do, because people say it all the time. Buying the dip without understanding the market and what the market's doing is not sound advice, guys. I'm going to show you a really boring tranche plan instead of just buying in on the day of a crash, on a red day. If you hold other assets and you want to rotate into Bitcoin, the bear market is not really a moment for dramatic all-in moves, and neither is a red candle day. I mean, Bitcoin and crypto does move fast, but not that fast. The bear market is a moment for structured, unemotional reallocation. A much more simple approach to this is decide what you're willing to rotate and what you're not. So if you got 3 pairs of Christian Dior shoes, real or fake, sat in your wardrobe, doing nothing, collecting dust, yeah, rotate those. No one cares about Christian Dior or Hermes bouncing sneakers and things like that. If you do have a bigger asset you want to rotate, convert it back to cash and then reallocate it into Bitcoin in smaller tranches over 3 to 6 months or something like that. Tie those tranches to time and not to headlines. Keep a written rule that might pause that rotation. The goal of rotating other assets into Bitcoin throughout a bear market is to avoid 2 classic bear market errors. Rotating everything in on one rotational day when the decides to drop that nuke on Washington, that's not the day you do it. But also rotating nothing until price is already running and you've missed the upside. The thing with Bitcoin is, and it's so cliche, and I hate saying it because it scares the hell out of people, is that, you know, Bitcoin will go down 70% of the time. It's corrective 70% of the time, but it's impulsive 20 to 30% of the time. What that means is it will go down for long periods of time, and it will go up in very short periods of time, and you don't want to miss those upsides, guys. This is the bit where you connect the rules to a real schedule so you're not improvising every week. I've talked a little bit about some of the confluences where I think the bottom might be, but I'm not going to sit here and pretend I know the bottom and I know when it's coming, because I don't. I will do what a bear market demands, right? And that is staying calm, right? Tracking risk conditions, reading the reports I do on a daily basis, understanding what the market's doing, where liquidity is, and how flows are moving through the markets. I do publish transparent portfolio updates. I've only just started that. It used to sit behind a paywall on my Substack, but I've decided in this video up here that I'm going to put everything out on YouTube for free of charge for at least 12 months. So stay subscribed to follow my real money Bitcoin portfolio. As well as my portfolio updates, I will be publishing in the next 12 months when my signal goes back to 0, and that is my cue to get back to risk on again. That is the cue that I rotate my $10,982 back into Bitcoin. And that's why staying subscribed to my channel matters. Thanks, guys. Not because I will call the bottom, but because when conditions change, you do not want to be reconstructing your plan from scratch when the market turns. Now, in a minute, I'm going to turn this into a simple checklist that you can cut and paste and one that you can actually follow. The bear market doesn't end with an announcement. You know, the Fed doesn't come out and say bear market's over. The bear market ends very fast, and it ends very quietly, and things move very quickly. That's why you need a plan. The real FOMO is not missing the perfect entry. I know you might think it is, but it's not. The real FOMO is being unprepared when the risk flips, because it does flip. It's about having no cash. You know, make sure that's the real FOMO. When the market does run, you've got no dry powder on the side, no cash. That's some real FOMO, and you start to panic. And having no rules. If you have these rules, you have this plan in place, this schedule, start planning now, today. That's when you can kind of avoid that FOMO and being emotionally exhausted after 9 months of noise. I like to think that this video specifically is not noise. I'm trying to give you a plan to survive the next 9 months and be ready for when the bull market does flip. But people telling you that the bull market's done, alt season's coming, the Fed just flipped the switch, all that sort of stuff is noise, guys. Data tells a story, not YouTube, not Twitter. If you build your plan now, the next phase just becomes execution, not a leap of faith. Thanks for waiting this long. Thanks for going this long in the video, guys. I do appreciate it. If you want to see my bear market checklist, pause the screen now. My final notes on this, guys, the bear market is not a pause. We need bear markets. It's all part of the cycles. Once you accept and understand that that is the truth, that is the only truth that you need to know, they become part of your planning, they become part of your process and your investment journey for the next 10, 15, 20 years. The bear market is a training camp. The bear market is a time to prepare. It's a time to get your house in order and get ready for the next 4 years, because that's how long it takes to make money in the bull runs. Not overnight, not with the launch of the Melania Trump coin or the Iran coin, whatever you want to call it. And if you want to be ready for the bottom, you've got to start building your plan today. You have to start making those sacrifices, putting that dry powder on the side to be ready when the time flips. If you do want someone tracking conditions, what's happening in the markets, ETF flows, that sort of stuff, documenting decisions in real time, trading with a real money Bitcoin portfolio, stay subscribed, because that's exactly what I'm doing. And when my signal 0 hits, I will be ready and calm in a position ready for the next bull run. Also, if you are interested in that DCA plan and what that might look like, hit DCA in the comments below and I'll make a video on that, but only if there's enough people interested. And that's it. And that concludes my bear market plan. Stay calm, stay subscribed, stay educated. And if this is the first time you've seen me on YouTube and you see my video, have a look at my Bitcoin investment traffic light system. The video's up here. Like and subscribe. Thanks, guys.